Hi everybody!
Welcome back to the channel. I've got safe, majorly sold off stocks that are good buys in March that I want to discuss with you in today's video. Over the past 2 months, Wall Street and investors have given a not so subtle reminder that corrections are unavoidable in the stock market. Both the benchmark S&P 500 and technology dependent Nasdaq composite have navigated their way to double-digit percentage declines since the year began. So I've done some digging into technology stocks that I have not recommended much on this channel, but I have done a lot of hours of research on. If you appreciate the research, lightly hit that like button and let's get into it. The first stock is down 50% in 6 months and is a social media company. Ticker symbol PINS. Shares of PINS are down 70% since hitting an all-time high. Arguably, the biggest objection from skeptics is the company's sequential quarterly decline in monthly active users, or MAUs. For reference, that's the most important metric for social media companies like Facebook, Pinterest, Snapchat, and others. By the end of March 2021, Pinterest hit an all-time high of 478 million monthly active users. Since then, the company's global monthly active users have declined to 454 million by the end of June, 444 million when September came to a close, and 431 million at the end of 2021. This 431 million figure actually works out to a 6% year-over-year decline in monthly active users. Wall Street tends to place a lot of emphasis on normal active user growth for social media companies, so this 9-month monthly active user drop is front and center for investors. But that top-level headline story of monthly active users doesn't worry me at all, and here's why. Although the past 9 months have resulted in sequential quarterly declines, the year prior produced monthly active user gains that were above historical norms. The decline since the end of March can be explained by rising rates of people returning back to their normal job and routines from the pandemic. In fact, check this image out. Q1 2016 was just over 100 million users. The long-term trend is still massively exponential. From 2016 to 2020, the Pinterest international user base has grown at a compounded annual growth rate of 44.8%. Based on data, 35% of Americans use Pinterest. Also, here's the most important thing about Pinterest's business. Average revenue per user, or ARPU, rose 36% globally, 43% in the US, and 80% internationally. Average revenue per user data clearly demonstrates that merchants are willingly paying more to get their message and products in front of prospective shoppers. Let me ask you, would you rather have 5 million users at $1 or 3 million users at $10? I love your comments, but beware, there are scammers pretending to be me in the comments section and on social media like Instagram. To conclude, Pinterest has a price to earnings of less than 20 and can be a $50 stock when Wall Street starts liking it again. Next stock is Upstart. Artificial intelligence is a big area of focus in the tech sector for its predictive capabilities and its potential to complete complex tasks in a fraction of the time that humans can. Upstart Holdings is leveraging the technology to shake up consumer lending, delivering better outcomes for both borrowers and banks. It's targeting the decades-old FICO scoring system, which assesses borrowers based on a handful of factors like their repayment history and how much they're already owed to determine their credit worthiness. Upstart instead uses AI to consider over 1,600 data points to deliver an instant decision 70% of the time, a workload that could take a human assessor days or even weeks to process. Upstart doesn't lend any money itself. It earns fees when its algorithm originates loans for banks, and the company says loans originated using its algorithm resulted in 75% fewer defaults compared to those assessed the traditional way. With that clear value add, I expect the stock to continue being profitable. The stock has positive earnings and the company is absolutely disruptive. As someone with a finance and analytics degree, this is the perfect company to disrupt the old, archaic Wall Street. The stock is down over 60% from its 52-week high. Here's why I'm also buying this stock for March. Number one, artificial intelligence models bring real benefits to both consumers and Upstart's banking partners, and this AI competitive advantage will only improve and widen with time. Two, it's a very capital light model as an intermediary between consumers and its banking partners. Three, Upstart is expanding its total addressable market, or TAM, into huge auto loan origination markets, demonstrating a large market opportunity. 4, Upstart's margin and unit economics have seen improvements and will likely continue in that trend as a result of increasing automation and scale. Lastly, 5, continued investment into its business and its focus to grow scale, revenue, and profits make it a very attractive investment. Also, something crazy that happened last earnings call that I honestly couldn't even believe. Upstart announced a share repurchase program of $400 million during its Q4 2021 call. This decision may surprise many investors, as I was when I was listening to the earnings call. It made no sense, but here's why it made sense. This is because Upstart is still a relatively young company and in a high growth mode, which implies that there should be opportunities for Upstart to reinvest in itself and also to consider acquisitions. However, CFO Sanjay was quick to explain in the earnings call the thought process that goes into the share repurchase program. Basically, it's actually not a capital allocation decision, given that Upstart management still sees many growth opportunities to invest in the future. The main rationale for the share repurchase program was really to be able to repurchase Upstart shares when they're deemed undervalued by management. So literally, management is saying the stock is undervalued. That's why I'm buying this stock in March. The third stock I want you to really listen to. It's expensive, but I'm recommending you do a poor man's covered call on it. I think you can make $1,000 or $2,000 a month on it. It's Google or Alphabet. The poor man's covered call is a video I want you to watch that I'm going to link in the description. It's perfect on Google because that stock has a lot of upside, but it's not cheap for the small portfolio investor. I'm going to show you an example very shortly. Alphabet is down about 13% from its recent all-time highs in spite of a blowout recent earnings report. In the fourth quarter, Alphabet's revenue surged 32%, accelerating over the 23% growth seen in the fourth quarter of 2020. Not only that, but looking under the hood, the drivers of that outperformance could very well last into 2022 and beyond. What really stuck out in the recent report was that the core Google search engine, Alphabet's largest business and cash cow, is accelerating despite its massive size, up 35.7% last quarter. That's remarkable for a business of that size, which brought in $43.3 billion in revenue just last quarter alone. In fact, it's faster than search was growing before the pandemic. When combining search, YouTube, Google Ad Networks, and other Google services and hardware, Alphabet's Google services bought in $26 billion in operating income last quarter. For a business that grew revenue and profits in the mid 30% range this year, the price to earnings multiple looks really cheap. With the stock trading at cheap valuations just based on the core search and other ad services alone, investors are also getting one of the 3 major cloud infrastructure companies essentially for free. Last quarter, the Google Cloud Platform saw revenue growth 45% to $5.5 billion and $19.2 billion for the full year. Alphabet also repurchased over $50 billion worth of stock last year, up 62% from the prior year, and that accounts for about 3% of its total market cap, indicating it is getting more serious about shareholder returns. With that being said, let's jump into my screen and look at a quick poor man's covered call on Google. All right, so currently the stock is trading for just under $2,700. I'm going to go to trade Google options. Now, what I'm going to do to establish this poor man's covered call is I'm going to go to the expiration date. A poor man's covered call requires you to buy 1 leap option and then sell covered call options on that leap option, acting as shares. But instead of paying the price of buying 100 shares, which would be $270,000, you can do it way cheaper. So let's go out to March 17, 2023. Now I'm going to buy an in the money call option. This is not going to be cheap. However, it's going to be way cheaper than buying the stock outright. And also you can use this strategy on other stocks if you wish. Now, what I'm going to do is I'm going to look at the 2200 strike right here. It has a 0.76 delta. A poor man's covered call should ideally have, roughly 0.75 delta all the way up to 0.95 delta. I'm cool with the delta being a little bit lower, closer to that 0.75 range. So 0.76 is perfect, and the implied volatility is pretty good right here at 36%. It's not super high, which means that you're not going to be paying too much money in terms of premium on buying this leap call option. Now I'm going to buy this leap call option right here. maximum loss is $66,000, which is a lot of money. However, it's way better than $270,000. And again, you can run this strategy on stocks like Palantir, which I talk about on my channel and I'm going to do a video on pretty soon. So I'm going to go to sell call option. Now I'm going to sell a call option that is closer to expiration, say March 18th, which is just 18 days away. Now you will see right here that if I sell a covered call right here at the 2700 strike, it's worth $77. So right here, I'm collecting $77, which is over 10% of what I'm paying. So instead of $66,000, I'm literally collecting $7,000, which is over 10% in 3 weeks. If you want to learn more about the poor man's covered call and running it on stocks that are way cheaper, check out this video right here on the poor man's covered call and how I make $2,000 a month running it.